always interesting to see what hedge funds are doing, both in case they get caught out and sort of present some risk to the market, but also some people like to try and mimic what they're doing. So we got some insight into that, Brian Sozzi, for your take today.
Yeah, and Goldman Sachs out with a pretty interesting research note. They surveyed 807 hedge funds that manage $2.7 trillion in gross equity positions. So not some lame-o survey here, a really good insight into the state of the world's biggest hedge funds. And they find that Facebook is the top holding out of this very large group. 27% of hedge funds, in fact, own Facebook stock. That is tops. That is number one. 57% actually have Facebook amongst their top 10 holdings. So despite all these regulatory concerns and perhaps maybe of peaking sales and earnings growth, you have Facebook still top of mind with hedge funds. What is not top of mind, it looks like, is Amazon. It was amongst one of the biggest stocks that hedge funds drew down or they sold. So they're a little more bearish on shares of Amazon. Overall, hedge funds are very optimistic outside of Amazon on Google and Alibaba, of all things, which is interesting. Climbing this list, this is an ongoing list that Goldman Sachs tends to update frequently. Citigroup, General Motors, and Freeport-McMoRan, which is a gold manufacturer, are now coming in favor with hedge funds, as are Snowflake, a company we've talked to here, a software provider, one of last year's biggest IPOs, Twitter, and Illumina, some of the largest increases in ownership amongst hedge funds, Julie. And the takeaway for me is this. Hedge funds, obviously, they love tech. They love the sales growth. They love the earnings growth potential. They love momentum. These are typically high beta type stocks. And they love companies that are likely to have pricing power. As we know, tech, in fact, has pricing power, which is very important in this land of increasing inflation.
Yeah, what's also interesting to me is when you get crowding on the part of hedge funds, right? The so-called hedge fund hotels where a lot of hedge funds park can sometimes then be vulnerable. I mean, the bet works out until it doesn't. Goldman Sachs looked at that hedge fund crowding effect as well, and it's down from the highs, but it's still above the average that we have seen. So I guess, for investors, like I mentioned in the beginning, there are sort of advantages but potential pitfalls to trying to chase some of these moves, right? Because if they get caught out, those hedge funds, in some cases are going to flee out of there and exacerbate the selling.
Well, Julie, what could cause them to flee is really higher taxes. That's not mentioned in that note, but big tech puts up a lot of profits, Julie.
Are you kidding me?
They put up a lot of profits, and you know what? It could really come back to haunt them.
It could, but it won't.